There are a lot of interesting things to talk about. Well, I think what we have on, let's just start with Bitcoin. Bitcoin is just kind of interesting structure in here. It has the tendency to be doing, as we highlighted, things like this. You see it shifting into the positive trend after we broke tail, and this what follows after that. So in all honesty, we are potentially looking at the shorts at the top end. We shall see whether this is going to play out. Coin, by the way, looks better on the short side. Hood looks better on the short side. MSTR, not so much. But Hood looks really interesting on the short side here. But Bitcoin is, well, doing Bitcoin things, creating trending and tail. This is actually tail lower high, most likely, we think it is, and then continuing lower into 80, 75, with what is on the horizon with the Quad 4 coming in Q2, with these massive problematic situations that are arising in politics and geopolitics. I don't think this year is going to be very positive for risk assets. This year, we believe, is going to be very, very, very negative for the currencies, all currencies around the world, and very positive for the debasement trade. But is Bitcoin going to outperform gold? I don't think so. Not this year. Is Bitcoin, or let's say stocks, gonna rise in dollar terms? Sure, they might. Like, really, they might. But gold is gonna rise like 50% more. So, yeah. Bitcoin, this is our take. We've been saying this is why we have not been long Bitcoin, even though the signal clearly shifted into the positive trade and trend on this day. And you should have been buying this dip if you wanted to take something on a trade basis. Yeah, but this is the reason why we are not buying this on a trend basis and not expecting anything close to a massive run into the all-time highs or the end of this down movement. We shall see how it's going to play out, but we are looking at 55 and 85 and 80. Yeah, and if I were to play anything here, I would be looking at selling any rips on a trade basis here, right now. Any rip on a trade basis in Hood, any rip on a trade basis in Coin as well. Dixie. This massive repricing that came on the back of the new policies ushered by the new administration here, and then we kind of stood in consolidation for half a year. We still of the same opinion that he's going to be pressing the same lane that Trump is going to be pressing the same lane he has been pressing, and these moves in Greenland are not going to end well. Not going to end well for the dollar. I don't know anything about geopolitics, but the dollar, and we clearly seen the pickup in the trade that we've seen last time the tariffs were announced. Down dollar. By the way, this is not only down dollar, this is negative trend as well. This creation of a trend lower high. Up gold. Well, gold is kind of just doesn't matter what happens, when happens. Gold is just doing gold things. And once again, I want to emphasize that we underestimating, and market especially, and people in the West still underestimating the magnitude of the change and magnitude of the shift. And I'm repeating myself that what we have now, and even though it looks kind of scary and parabolic, which it is, undeniably it is, and every single day I'm asking myself, are we close to the end? Are we closer to the end of this cycle, and we're gonna get something like this again? Something like this again? I don't see, honestly, that happening. I see this happening. I see us picking up like another 100% into moves like these, and then maybe. But once again, this is not the debasement trade that we had in here up to 011, 010, 011, right? I'm looking at this more akin to when the 71 happened and they debased the dollar and depegged it from the gold price. Looking at this more like this. And yeah, so this has much more room to go, much more room to go, I believe so. All right, that's clear. Nothing changed here. Any dip in trade basis, dip in trade, dip in trend is you just buy this. I don't see any other way. Silver is nice as well. Oil, as we've once posted that, well, there is a good chance for oil to really break down here based on just on the flow alone. It didn't happen. Once we really put in this day, we said that yeah, that is highly unlikely, and we put on longs on XOM especially. We entered on this day. It's proven to be quite impactful. So far, we believe it has more room to go regardless of the oil price, but the oil is signaling positive tail and positive trend and positive, by the way, yeah, oil is positive trend and positive tail as well. So I would not be surprised to see the flow is very accommodative for a run into the 65, 66 on oil. Yeah, Dixie lower, and we believe should be going lower. Once again the Trump, or the not the Trump but the Powell term ends, he's gonna be not raising rates, holding rates. It doesn't matter. But the 2 year is unlikely to gonna drop significant, while Powell is still running things in the Fed, at the Fed. And so this is what the signal is saying. US 2 year is positive tail, trade, and trend as well. But by the way, but at the same time, Dixie is negative trend and trade. We've seen this multiple times throughout this price action. But when the 2 year turns, and it will turn because he will gain control of the Federal Reserve, I do believe so. He will gain control. And yeah, we'll get a massive move lower in 2 year and in the dollar subsequently. The problem Trump has, is with the midterm elections, but they are later in the year, and he cannot possibly afford to have them. He cannot cancel them, but he can instruct or the Insurrectional Act or martial law to bring to reality the martial law. Most likely, he has to cancel them somehow. So this is going to be a big theme of the 2026 in the unrest in the U.S. or beginning of martial law, beginning of Insurrection Act, anything of that nature, which plays negative for dollar asset, plays negative for Dixie, plays positive for rates, and plays positive generally for that trade. Dollar down, rates up, everything out of the US assets. This is the scenario I'm describing, and plays unbelievably positive for gold price. Unbelievably positive for the gold price. Just as I've been saying, we haven't seen nothing yet. We have not seen nothing yet. This was we got close to me saying, holy moly, this kind of looks scary, and the volatility is absolutely blowing up. We gotta move here. We gotta just relax for a little bit, and we did. The volatility popped, and that's it. By the way, and the rhetoric and the people and the sentiment around this, like everybody and their mother in the West were screaming that this is a bubble. Gold is a bubble. Oh my God, you haven't seen nothing yet, guys. You have not seen anything. When we come to the point where gold is going to be going like 5% a day, like multiple days in a row like this, and the vol is blowing into like 40s, 50s, yeah, maybe then it will be like at 7,000, maybe, I don't know, 8,000. I'm gonna be sitting there and saying, holy fuck, I have no idea what to do there, honestly. This is kind of scary, but not now. So oil is oil. I've described what we think about this. Is there a trade to be had in euro right now? By the way, I do believe so. The Powell term ends in May, so we're getting kind of close to that. Yeah, at some point you want to be putting longs in euro, but once again, if you want to play any currency on the long side, it should be gold. But there will be a time where euro will offer a very nice risk reward play in the short term via options. Via, by the way, because you cannot play this thing via options at all right now. Like very tactical, but the optionality, the long dated optionality calls it's just too expensive. It is unbelievably expensive by any historical norms, and yes, I think it will become even more expensive, much more expensive. But it's kind of a scary place thing to take right now on. Very tactical, short-term things with options. Nah, not that bad. Maybe the what is it? Spreads also doesn't look that bad because of the skew, because of the unbelievable pause. By the way, let's look at the skew. If by the way, why didn't I think of that yesterday? Why not skew? I think I gotta just log in and look at the skew real quick. If because if you want to take leverage, take gold on the long side with leverage, buying calls right now, they're very expensive. Like at the money calls, if you go in 1 year, 2 years out, with the ones that we've been advocating for years, like for going back 3 years, they are right now like $9,000 a pop, $9,000 a contract. Give me January 2027, and let's say gold does 50% plus. Let's not go that far. It's gold kind of did, what is it, 77%, 70 plus percent this year. In the scenario that I foresee, I would not be surprised to see another 70%, 80% plus year. But let's be very conservative. Let's be like 30%. What do we have at 30? Let's say 550, 600. Let's say 550, 600. Gen 17, 27. 550. The spread on this is gonna be quite painful, I suppose. Not really. Decent. 550. 600. So what do we have? By the way, this is a decent way to play this. To take some form of leverage, just add this to your core position. This still looks decent. I would still wait for the down day and take it on a down day or downtrend move from here, but this looks decent. 400 into, yeah, very much so. Let's do 500, 550. This also looks very promising. 500, 550. 500, 550 from here is 27%. Well, this is very promising. By the way, this looks unbelievably positive. 500, 550 just to take on some good delta. Yeah, this is very much so. 1 to 3 at the weakest, 1 to 4, 1 to 5 even at the weakest, and at the best you get very decent risk reward. And you can put on multiples of these contracts. Just because of the skew, I'll post this back. This is the way to play this, by the way. This is undeniably the way to play this now. Yeah, that's good. I'll give it more thought and we'll get back with the actual trade here, or allocation, because I still think this is the best thing to be allocated for. If I still think that Dixie is gonna do what Dixie is gonna do, like go into 96, 95, 90 this year, and euro is gonna break out higher from here, gold is Jesus. Go once again, yeah. Okay, so this is still the main focus of everything right now. A couple of more days like this, couple of more threats to Greenland. Let alone actual movement into Greenland, or actual military moves into Greenland, or it's gonna be painful for the US. There are two anchors that holding Europeans and US from really going off the rails right now. Europeans depend on LNG imports from the US big time. Europeans are retarded, like most of the European nations are, clearly, undeniably, straight up brain dead cunts that are in the power right now. let's say Germany, that literally made the same mistake Ukraine made when they gave up their nukes in 91. What Germany did is literally gave their energy independence for nothing, essentially. They've been still closing the nuclear reactor. They're just brain dead, honestly. So when you are not energy independent, you are nothing. You're literally nothing. You're less than nothing. You don't have the voice on any matters at all. One really painful thing: Europeans in total hold like 8 trillion of the U.S. assets. And given how incredibly financialized the U.S. economy is, by the way, U.S. is gonna feel the pain much faster than Europeans do in a case of all-out war or any conflict. Because if they start selling, if world starts selling U.S. assets, and we're gonna see the same trade that once again we saw, and we are seeing once again. I'm talking about this because this is a repeat of what happened in April after he announced the tariffs. We're gonna see the repeat of this. This is what's gonna happen to the US 30-year, but it's not gonna stop. Like, it's gonna go and go and go until the Fed comes in and just caps yields entirely. And this is not gonna happen to the dollar. We're not gonna see this to the dollar. We're gonna see some unprecedented, scary fucking this. Literally, we're gonna see this to the dollar. Every single month, we're gonna see bloodbath in the dollar, and this is gonna be very painful and very fast. And by the way, we're gonna see the same thing for SPX. Initially, we're gonna see the same thing for SPX initially, some semblance of this, maybe to the smaller degree, but it's gonna be very painful and very fast. Like, it's palpable in the matters of days and weeks. You open your RIA account, you open your 401k, and you look and you had 1 million in assets, and now you in US assets, and now you have 500,000. Like, your purchasing power and the dependence of GDP of the United States on the SPX index, essentially on the US equities are so great that they cannot afford to drop this. And this will happen. What is happening right now to the Japan 10-year will be happening right now to the US 10-year, US 30-year. But once again, they will come in, and what they did here, they will cap yields. And then dollar will just absolutely get murdered. In that case, we're not going to see dollar at 90. We're going to see dollar this year at 70, 80, even 80, 75. And then it's not going to stop. It's going to continue. It's going to continue and continue and continue. And yes, the SPX will turn around. The SPX will do exactly the same thing it did right here, but in dollar terms, it will actually be down. Because if SPX this year, in that worst case scenario, rises like 20%, good luck, because dollar will fall 20%. So you're actually going to be losing money on a real basis. And gold, in that case, will be up like 50 plus 70%. So yeah, that's kind of more of that, more of Greenland, and there we go. By the way, Japan 10-year, rather scary, rather, I don't know, I have no idea, honestly. Interesting that the yen does not react to this with a massive move up right now. But we shall see. I have no idea how this is gonna play out, or what effects this is gonna take. Now, on the yen, yeah, sure, I know what effects it's gonna take, but generally on everything else, I have no idea. Are they gonna start selling U.S. trade? I don't know. I do not know. But this is a big thing to look at and observe. Yeah, I guess this is it. This is not the play right now. US stocks is not the play right now. In fact, we are negative trade right now, positively, and very close to breaking trend, and kind of looks scary from now after we exhausted and took the all-time highs but didn't commit to going higher. This can easily go back down to 6,500. Yeah, I think once again, unfortunately, the only play. By the way, let me emphasize this. Like, this is not normal behavior for the US 30-year yield, right? This is not normal for the ZN, ZB, UB. This is not okay. But this will continue happening because Trump is not going to stop, and this will continue happening. More Greenland threats, this will continue happening and even get faster and vigorous to the downside. More threats to the Powell, or Powell resigning, and they start cutting rates. This will gonna happen faster. So I don't see how the dollar survives this year. Honestly, I do not see how the dollar survives this year and not prints another like 10% lower as of now. Yeah, so these are the trades. The trades potential on on the short side is in Bitcoin. Potential is in European longs, Euro longs, US oil longs, but you should have put on some longs. This is the best way to play this out of everything you can take this on. This is kind of irrelevant right now, nothing to do here, and this is still the biggest beneficiary of everything that's happening right now. And yeah, I'm gonna get in and drop some skew photos, screenshots, and risking 700 for 4,200. We should not be looking at this at all. We should be looking at something like this. But even here, risk reward is unbelievably positive, unbelievably tantalizing. This is good. This is good way to take on leverage without committing too much capital or risking too much. This is very, 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 very good. I'm gonna look at this more deeply, in depth.